This episode of Talk Your Book is proudly brought to you by Spirit Technology Solutions. If you do business, do it with Spirit.
Fundies called me up, told me to take a look, but stay stubborn as bulls and talk their own book. Get the money, get the money, get the money.
Well, Michael Frazis, thanks very much for making your debut on Talk Your Book. I'm really excited to get to sit down and have a chat today. I thought before we get into your company you want to explore, it'd be good for viewers and listeners to get a feel for Frazis Capital Partners and what your guys' investment philosophy is, because it feels like it's quite unique for the Australian market.
Sure. Thanks a lot for having me on. I guess our strategy kind of stems from the observation that, or kind of the reality that most of us grow up reading the same investment books. You know, we have the same approach. We talk about free cash flow. We're schooled in that idea of trying to find $1 and pay 50 cents for it and get that kind of 2x uplift or less. But the reality is, you know, the best performing stocks of our generation of the last 10, 20, even 30 years have not been companies that fit that profile. You know, generally they're growing extremely fast and, you know, they're investing heavily to meet that growth. So the companies we look for are those that have explosive growth and true customer love. And we found that using those two principles is actually a really powerful framework because it gives you the right answer to the question of whether to buy these controversial stocks or not. So local examples that people know are things like Afterpay, offshore companies like Tesla, Netflix, early days Amazon. Like in all these situations, there were devoted fan bases. You know, in Afterpay's case, people were tweeting and posting on Instagram about it. You know, nobody does that about payments. That's true customer love. But then the explosive growth part is also important because it means they're actually delivering. They're growing exceptionally fast. They're attracting customers. They're bigger, better, and stronger every day. And a typical example of that would be something like Apple. So you think about Apple when they launched the iPhone. There was actually some pretty serious competition. You know, they had Nokia, BlackBerry, Samsung, Microsoft. But Apple was the only company that people would queue outside stores and obsess about and sell out months in advance. And if you fast forward over the next 10 years, that customer love translated into explosive growth. They're able to charge a few $100s extra for every iPhone and, you know, created $2 trillion worth of value. So we found it a really interesting framework. Encourage people to try it. Like, even if you look at something like Bitcoin, think about it in those lens. Like, did it have true customer love? Well, yes, people obsessed about it. They quit their jobs. You know, they couldn't stop talking about it. Did it have explosive growth? Yeah, usage went up, you know, exponentially. So even in something completely different, that framework really gives you the right answer. And so what we're trying to do is create a portfolio of companies just like that and kind of crank the dial on that explosive growth and true customer love as far as we can. So, you know, the organic growth rate of our portfolios would average over 100%.
And do you think sometimes investors, particularly retail investors, oversimplify things a little bit? Stocks are either value or their growth, and they lump all, you know, really high PE or high revenue stocks in the growth bracket, and maybe can sometimes ignore the rapid speed of growing to separate which growth companies still represent value at an incredibly high multiple and which ones are just caught up with a trend.
Yeah. I mean, you just need a completely different tool set for each of them. You know, if you're analyzing, the value tools are very good for analyzing and comparing different value stocks, like which one's earning the most, what are you paying for a certain level of growth and a certain level of free cash flow. They're very good at kind of distinguishing between them. But growth companies are just different. You know, the good ones spend all their free cash flow. You know, they hire people. It's all on human capital, so it's all expense. You know, they'll hire brilliant software engineers. They'll spend on marketing. You know, the things that make a good value stock almost the opposite to what makes a good growth stock. You know, you just need a totally different lens and a totally different framework. I'd say retail investors generally get these ones right. So if you look at Tesla and Afterpay, you know, that's some of the heaviest shorted stocks in the market. It was professionals shorting them, not retail. And if you think about last year, you know, it was retail that was buying. We know, if we look at the flows of who was buying and selling in that huge sell-off in March 2020, it was net selling by institutions and net buying by retail investors. So retail investors get it right as well as wrong.
And you had an incredible year last year. I remember following your performance from afar. We like to open up opportunities for humble bragging on Chris Judd Investor. Maybe for our viewers that weren't aware of your performance, walk us through how you guys did it last year, because it was pretty amazing.
Yeah, so it's pretty startling. I mean, we suffered like everybody else. We're fully invested in companies like Afterpay, Tesla, Carvana, companies that dropped a lot. So things were looking pretty bleak in March, but we just kind of held our nerve and just stayed invested. Like, we didn't do anything fancy. We bought a few things at the bottom, but we also sold a few things at the bottom. You know, we didn't call it. If anything, we got it wrong. We thought the coronavirus wasn't going to be a big deal. But once markets really started moving, or like moving up and down, we just sat, we just held our nerve and just stayed consistent. And that ended up performing all the short sellers, all the hedges, pretty much everybody else. And we did over 100%. I think it was 108 in the end, net of fees by the end of the year. But it really came down to those moments in March, which were pretty scary for all of us. We just stayed invested. And that's kind of what we believe will work the best over the next 10, 20, 30 years as well. The worst thing that can happen is you pick one of these markets perfectly. I mean, I think years ago I picked like 3 market movements in a row and then lost 50% in the next one. It's like the worst thing you can do is be overconfident. And like you have to think of a strategy that you can actually run for 10, 20, 30 years. If you optimize for the long term, it becomes very clear that you shouldn't sell every sell-off. You shouldn't sell every rally either. So actually there were 2 things that helped us last year. It was not selling in the sell-off. And it was also not selling when we were up. We just stayed invested throughout, when we're down, when we're up. And I think you need to sit still for both of those things to get those kinds of returns.
And what stock did you want to walk us through today?
I actually wanted to walk us through Moderna. So obviously they're famous for providing one of the first vaccines. I think it's a really interesting company. So happy to go into as much detail as you have time for.
Yeah, that'd be great. Well, let's start with the helicopter view of Moderna and what they do.
Right. So Moderna was set up about 9 years ago. The idea was, we obviously have DNA that is then read by mRNA, which is then translated into proteins. The idea is, what if you could insert some mRNA in a cell so it doesn't affect the DNA, but then create a particular protein that could then have some kind of effect. In this case, the idea is, in the vaccine sense, the idea is, okay, you've got these highly, infectious virus particles, but they have a surface. What if you encode in the mRNA the protein for the surface? So your body then learns to kind of react to that. It recognizes that as foreign. But the harmful parts of the virus aren't there. It's just that surface protein. What if you can do that? Would that be protective? And this was an unanswered question. So I've been aware of this company for a while because I met one of the chief scientific founders, many years ago. And the closest they got was with cytomegalovirus, which is kind of a type of herpes. Doing vaccine research is a really long grind because they have to be so safe. So if you have somebody with terminally ill cancer, you can actually ethically justify giving them quite extreme treatments. If somebody's got likely a very short time to live, you can really kind of push boundaries of acceptability in terms of safety. If you're going to give 6 billion people a vaccine, it has to be so safe. And we're now seeing with AstraZeneca, there's safety issues that are kind of like in the 1 in a million range. But even that might not be acceptable. So think about, from a business perspective, a development perspective, how expensive and how long those trials must be. And then also, usually people don't really want to pay up for vaccines. It's the sort of thing people need to be dragged into. If they're not compulsory, people generally try and avoid them. So it's a terrible market to be in. But Moderna was just sitting there plugging away for, I think they were founded 9 years ago. So sitting there plugging away, they spent something like $6.5 billion on R&D. Their herpes, their CMV vaccine was a very long way from development. But they happened to do some work which was funded by the US government on SARS-1 and MERS, the kind of camel equivalent. So when the epidemic came, within several weeks, or depending when you count the start, very quickly, the genetic sequence was adopted. Moderna could then find the sequence for the spike protein. So they didn't even have any access to the actual virus itself, just the ones and zeros, just in this case, kind of the 4, codes of DNA. Just that code, they then created their own vaccine. And that is the one that ended up being successful, many months later. And so it's a really interesting story of, firstly, the fact that they're able to prove the mRNA vaccines worked. But secondly, it kind of marks, I don't want to get too philosophical, but it marks a change of biology and vaccine development from being a wet science where you do your work in a lab with cells and messy stuff to a digital science where you don't even need the kind of wet lab to kind of develop a vaccine. So it's a really very revolutionary approach. It's a really exciting company. And they've done spectacularly well financially now. And also in terms of the impact they've had on the world.
It's interesting you talk about that wet science versus the data aspect of Moderna, and reading through their presentations, that's really what struck me. They refer to themselves as a platform stock. They're very data heavy and they use AI extensively. Maybe dig a little deeper into that idea that they are in fact a platform stock and a data stock as opposed to a traditional drug manufacturer?
Sure. So the idea is basically what they did with coronavirus, the latest coronavirus. They could do with effectively any virus really, or any kind of protein that you wanted to target. There's some serious technical challenges in developing these. One of those is if you just put mRNA into a cell, it just gets destroyed if you inject it into somebody's arm. So they basically had to create a way of creating these layers of effectively like a tiny, it looks like a little cell, with multiple membranes. And then manufacturing that was really non-trivial. That was probably the hardest part of the challenge. It wasn't actually the mRNA bit. It was finding a way to put it in a form, a lipid nanoparticle form, that when you inject it, actually got taken up by cells. Really difficult, really complicated. But now that they've done that, the actual mRNA bit's relatively straightforward to change. They can adjust the kind of shell to make it hit different organs in the body, different tissues in the body. But really, they can now adapt that and get spike proteins for, firstly, any variants of coronavirus, likely variants of influenza. There's a chance they could be able to adapt it to target cancer. And there's no real reason, theoretically, why that shouldn't work. I mean, you're injecting the mRNA, you're creating the relevant protein that will be recognized by the immune system. It really should work. And they should be able to develop treatment after treatment after treatment. And there's definitely precedent for that. There's another company, Alnylam. So they do RNAi, so interference RNA. And they were the first to develop slightly different lipid nanoparticles. And they developed 4 treatments to market and have an extensive pipeline. So it just shows once you get that lipid nanoparticle right, you can actually develop treatment after treatment after treatment and just replenish your pipeline indefinitely.
And so you speak about that pipeline. When you look at a stock like this, what do you feel is their addressable market when you think of not just the COVID-19 vaccine they've produced, but the other vaccines they're working on as well?
I mean, it's enormous. It's almost, addressable markets are really tough questions to answer. I'll give you a couple of numbers that are kind of back of envelope though. So it's a $60 billion company roughly. They've got purchase agreements for $19 billion already. It's extremely high margin. They're likely to sell 3 billion doses over the next 2 years. And they're selling them for about $15 to $20 a dose. So, that's like their entire market cap effectively in the next 2 years, just on coronavirus. And I think the politics of coronavirus, I mean, it's speculation, but the politics of coronavirus is such that people will insist on being vaccinated. Like coronavirus will likely become an endemic part of, the world as previous coronaviruses have done.
So you don't view that revenue as a one-off that'll be gone in 2 or 3 years' time. You think with the variants, it'll be an ongoing revenue stream for the foreseeable future?
Yeah, I mean, and they're working hard to kind of make that an attractive product. So where they're going is they want to have booster shots that don't just cover all the existing variants and all the new variants, but also potentially target new influenza variants. And influenza is much harder because the surface proteins change all the time. It's one of those viruses that has evolved so that there's immense kind of variability on the surface, which is why it's so difficult to treat. So there's a good chance that, every year you'll have an annual kind of mRNA dose, potentially from Moderna or potentially from someone else. But it'll almost certainly, my view is it'll almost certainly happen that you get these annual shots. And unlike existing, influenza is a tough one. Like now the virus is mostly grown in eggs. Influenza kind of like adapts to the egg environment. You have to kind of pick the surface proteins 9-10 months in advance. Then obviously they evolved since then. So they're not very good vaccines. But mRNA, as we just discussed, can be done very, very quickly. So we do think that just on those respiratory diseases, there's a huge market, an ongoing market. It's not just a one-off. And that's before you get to the rest of their pipeline.
Maybe talk us through just how deep that pipeline is and just how many vaccines they're working on at the minute.
Yeah, sure. So there's CMV/herpes. There's Epstein-Barr virus, which is one, if you get that, you have 15, 20 times greater chance of getting cystic fibrosis. What would really be the next leg up in value would be if they can do a proof of principle on oncology in cancer. If they can find a way to treat or improve the treatment of any cancer. And cancer cells are the same but different. The surface of cancer cells is really important. But obviously you're recognizing adapted human cells rather than completely foreign. But it's a pipeline that can basically be indefinitely regenerated. So they've also got candidates in the pipeline for Zika, for Nipah. But really, it's any virus with a surface protein, which is all of them. you could technically target with their approach. So it's really just a case of allocating priorities from here.
And they've got about $8 billion of cash on their balance sheet. Do you see that being used to fund that R&D, or do you see them potentially picking off some smaller acquisitive opportunities going forward?
Look, I think it's going to be really hard to spend $8 billion in R&D. This is one of the most well-resourced companies at the moment. And they're expecting to get, $19 billion just on their existing purchase agreements. This is going to be a very cash flow rich company. As for acquisitions, I'm not sure. I don't think you need to, they're probably too big now for anybody to take them over. I don't think you need to think about this in terms of acquisitions for growth. The single best return on investment they'll get is finding a new virus and targeting that protein and spending a few $100 million to take that through the pipeline. I think that's going to be the optimal strategy for them.
And then lastly, COVID-19, anytime you speak about it, it's a very emotive subject. Obviously, Moderna's profited a lot from a vaccine, albeit one that many in the world were crying out for. How do you sort of view philosophically companies profiting at such large numbers from vaccines that are, sort of a must-have for the world to open back up?
Yeah, I think if you think about it, it's kind of magical how these things have just appeared out of thin air. These things didn't exist previously, whether it's a drug or these vaccines. They've appeared out of thin air because there's a huge commercial drive. So this is a 9-year-old company. They spent $7 billion on R&D. There's immense pull factor comes from the fact that they're able to charge for these products. So that's one thing I think you should think about. The other thing is, medicine and science is so deeply underfunded that whenever you see one of these companies that's research orientated get this windfall cash, that's no doubt going to be extremely good for all of us. So you've got to balance those two things. It's very few institutions will spend billions and billions of dollars in R&D, but that's something a company like Moderna has done.
And that money's got to come from shareholders, I guess, that want a commercial return for the money they've put in.
Yeah, exactly. So I'd say, biotech is mostly a loss-making environment. Like sometimes you have 20 companies going from the same disease, and even if one of them succeeds, 19 of them are not going to win the market. It's incredible loss-making. And we invest in early stage biotechs across the spectrum. So we see that. We see people commit 20 years of their lives to bringing something to market. That maybe they did their PhD in it and all of a sudden they're CEO of the company and then it fails in phase 3. It's so dramatic. There's so much commitment, not just in money, but in like huge chunks of people's lives. That I think something like Moderna should be celebrated, not criticized. There's one other really important factor that I think gets overlooked, and that's how good value this vaccine really is. Australians were paying hundreds of dollars a week to keep people in work. This vaccine is $15 to $25, max $40. Would you pay $40 to be once off vaccinated to save several $100s a week for a year or more? People don't want to spend on the science and on the med, but they're so happy to spend on other things. But if you just put those numbers next to each other, you can really see that actually Moderna's doing something good here.
Well, anytime we speak about COVID or vaccines, we've become very hard for people to find on YouTube. So hopefully this episode does get discovered, and it's brilliant the way you've laid it out. So thanks very much, mate, for coming on the show.
Thanks, Chris. Really appreciate it.
This episode of Talk Your Book is proudly brought to you by Spirit Technology Solutions. If you do business, do it with Spirit. If you're enjoying Talk Your Book, make sure you subscribe to Chris Judd Invest.